Hello, Warriors. Who's ready for another week? Give me why if you are. If you did your work over the weekend, you already know what you want to do this week. Hi, Sinatra, Glenn. How's it going, guys? James. Hi, Kay, Blake. Forgive me if I butcher this. Abjith. Welcome. The Face. Hi, Brand. Paul. Ryan, how are you? My condolences. Paul Penn.
Thanks, Dale.
Mike. A lot of people with Ys are ready to go. Jean-Francois. Okay. Brand did his homework about geopolitical. It's a big risk. Okay. So, good morning, Ryan. How are you? Why don't we start off with a little give back in Euro? Not much. Just what I'm thinking is here's a little 3 drive. I'm just not going to play a counter trend, but I think there is a pullback coming. Do you have a view in Euro here?
Yeah, we're knocking on this 109, 109, 10, 15. A few people got levels up here. It seems to be a bit of a gateway for a move higher up towards the 110. I think you got to go with the flow on this one. Yeah, you may get a pullback. We got a pullback last night, obviously with the headlines going on, and it's still all about the dollar. So while the market wants to whack the dollar anytime it feels fit, anytime you get any dollar good news, it's probably a dip buy in this one for the moment.
Okay, and what might be behind it is, we were on the verge of a breakdown in the 10-year, and we have an update. Maybe they're going to try and rally that a little bit, and that's going to give the dollar a little bit of a boost. I'd welcome a rally in Dixie, maybe back towards 105.
Yeah, well, since last week, that 420 in tens is absolutely pivotal at the moment. If we get below and hold below there, then your dollar's going much lower. But while it stays above, it probably puts the handbrake on a little bit.
Yeah, that's kind of the way it looks.
Yeah.
Gold outperforming silver by a lot the last couple days. Are we going to head up towards this third drive line up here? I'm not sure where it comes in.
We need to take out this 20 area. That was the high last week, whatever it was, 22, whatever.
Yeah.
So it's a key. If we bust that, then we need to take out that 24.50, which was that prior high that you've got off that line. Yeah. But it's holding the big figure. That's the important part. 23.90. Keep doing that.
This comes in around 24.70. This line up here. But when the gold silver ratio is acting like this, maybe this was A and B, and we're going to get a C wave. So if you want to scalp the short side of metals, which silver would be the one because of that. Euro pound, big deal, up 9. What do you think? What's your target? 82 on this?
Mid to high 82s, 82.70s. If you go onto a wider chart, there's a huge level down there. If you go on something like a weekly,
I think that's where. Yeah. Let me fix this. So that's still making cable, even though today it's a little different. It's making cable your preferred short as long as this keeps going. So this is what Ryan's talking about. If you just take this formation only right here, it would measure.
If you zoom out a bit further, it goes all the way back to 2018. That 82s.
Okay.
So yeah,
I see 2020. Yeah.
Yeah. So you can see just those highs above the 82, or those lows just above the 82, going back to 2020, 2017. That's going to be a big old area down there. But we might take 8 years to get there the way this one moves. But the key still got to decide what it wants to do. This big figure, if it stays above 84, then maybe we've seen a bit of a bottom. But if we're back under and start holding under, then expect at least mid 83s.
Yeah, we'd have to get back above 85 to negate this breakdown.
Yeah, that's the even bigger level above there. So yeah, lots to do.
Okay. Well, we had this, huge move in the yen. I know there's still a few eliticians saying we could get one more high. I don't know. I think rally to 160. I may give it a shot up here. Yields up, maybe yen up. Why don't I bring Kman in on?
I was just about to say, I think there'd be a long queue though up at 160.
A long what?
A long queue of people waiting to hit it up there.
Oh, really? So it may not even get there, is what you're saying.
Yeah.
Okay. You have a view, Kman? Good morning to you.
Hey, good morning, Dale. Morning, everybody. Yeah, as I said on the flow show, it looks that the MOF has bought time to until the Bank of Japan with their interventions. Also, with the dollar a bit on the defensive, I think we could hang around here for a while, and the yen crosses decide upon the dollar yen more than anything else. Seen them actually being small bit again, perhaps the euro a bit more, because the euro is a bit beat this morning on the crosses. But yeah, I could see it hang around here for a while. I guess they scared perhaps people way enough not to take it above 160 anymore, but I still think 157 is a big level, and that's still not breaking right now. So yeah, I think rangy for a while, potentially even into the Bank of Japan, unless we see bigger negative dollar data, in which case the 157, 57.40 would come in danger perhaps. But yeah, until then, I think the crosses may do more than the dollar yen actually.
Okay, so really, it's interesting. The 50-day and the trend line really running together with confluence here. Underneath, it opens it up maybe to 52.
Yeah, that's what I was saying as well. 152 morphed into 155, then now it morphed into 157. So if 157 gives way, I guess 155 is going to be eyed at, and then obviously the big level to the downside will be if one day 152 gives way again. That would be really big. But yeah, we are still quite a bit away from it. And to come back on your gold and silver, I think it's kind of logic because we're getting more negative economic data. So I guess gold is going to outperform silver, and also I think geopolitics are not yet we're not yet done with, and I also am only half a believer in that little dollar uptick that we got on the back of tighter inversion. Actually, some people are saying that 230 is uninverting, but I'm not sure whether the bond market is really trading 230s. Yeah, so I find it a bit logic that gold is more of a refuge than silver is right now.
Okay.
Gold is holding very well, very well.
Okay. GDX, I can't find too many miners that haven't. I think you have to call this a breakout.
Well, if both go, that's what we said there last week on one of the F.A.C.E shows. If both go, if the miners and the cash go, that's very bullish, no?
Well, the miners have actually, made new highs for this move from the bottom, and gold hasn't yet.
No,
So
but
that's actually, they're leading which hasn't happened in years, but is happening now. So, Newmont never gave much back. It's at some pretty important resistance here, but they're acting good. I mean, I'm hoping for a break. I missed this last wave. So I thought we were going to pull back to around here. And then, quietly, just in 2 days, boom, boom.
Yeah, I hope they
chase it.
continue. I hope they continue to go. I'm long gold, so
Yeah. Okay.
yeah.
Anyone want to comment on risk? I mean, the only comment I could make is,
Uneven.
Well, we're not going to tackle the elephant in the room, Dale. Good morning, guys. By the way,
what's that?
The assassination attempt on President Trump.
It's political, isn't it?
Well, I know. Well, I mean, we have to talk politics when it affects the markets, and
I don't see any effect on the markets, or I would. Do you see effects on the market from it?
Oh yeah, the Mexican peso weakened substantially. It's down, and that's, I jumped in the chat room right after, literally maybe 30 minutes after that happened, because I happened to be hanging around the house and over the weekend, and so I'm like, well, we should think that the Mexican peso is going to weaken. I thought the dollar was going to weaken a little further, but it gapped higher, but then it has given back its gains since then, and I actually thought stocks were going to move higher as well, but the reaction obviously is I think that sell-off was the initial knee jerk, but it really what happened over the weekend just kind of confirms that probably what we all have been assuming is President Trump's likelihood of retaking the White House is much greater now, and we should probably see a continuation higher in equities, like probably moving into the elections. That would be my thought. So,
okay,
yeah, and
go ahead.
No, I was just going to say I don't like to talk about politics or favoritism or the way I personally feel or the way any of us personally feel, but politics do, and they will move the markets regardless of your political affiliation, and a situation like this obviously is a very, very bad day for America as a whole, and that for me, that was the one thing that I wanted to make sure that everybody knew, that this is it's a sad day in the US, for a situation like this to happen. But I think it does, unless something dramatically changes between now and election day, it does seem like it has pushed the odds further in President Trump's likelihood of him retaking the White House. And we got to think about what the market implications for that are. And even you've seen the bid in crypto, and Bitcoin rallying back above 60,000. I mean, that's significant, and it's I think it's a direct result of what happened over the weekend. What's that?
Yeah, it held right where it had to. The Bitcoin, I think you had this line drawn too. So I had this line drawn, 52 grand was the target. It's coming out. Yeah, nice little pop off that level.
This channel support,
if you want to talk about it, Blake, to me, it's the first shot of the Civil War. Now there's a little bit of a reaction of, let's calm it down, a little kumbaya, but I think that'll last as long as the dollar bounce, which means it'll be fleeting. So that's the way I see it. I mean, look, the left is saying it's staged, the right is saying it's an inside job. The repercussions are, can we get an election off? And neither side will accept the results, unlike France and the UK. So I don't know. I think that's dollar bearish. People looking at it, you want to park your money here? I think a lot of people might, big funds might be moving away. So, yeah, I do think it has implications. Probably, risk eventually let's talk about risk because there's a lesson in what happened after the so-called key reversals, and this is the difference. NASDAQ actually had a key reversal and hasn't made a new high. S&P had a reversal, but it wasn't a key reversal. We never took out the previous day's low. It was just
But
a
I think
reversal
that
day.
was by maybe 1/10 of a point or 3/10 of a point. It was like it was really, really, really close, but didn't.
Well, let's see. The previous day's low was 55.77 and 55.76. Maybe you're right.
Yeah, it was. I looked at it. It's closely. It was just a couple
Okay.
tenths of a
Anyway,
pip.
this was you know, so then let's just say this was more classic. I mean, I didn't have to use my cursor to see if it was a outside day or not.
Right.
So far, the bounce hasn't gotten even up towards that while the S&Ps are making new low. Now, just caution about one thing on the S&Ps. It's what I see. I see a 1, confirm. I see a 2, diverging. And another new high in here today, tomorrow. I don't think will confirm, and it's a third drive. A couple of other things is, I've been waiting a long time for the Dow to get up here for potential Ellioticians would call it an ending diagonal. So there we are. There's a Dow now. If you look at it on the weekly, it's even more classic. Now, you need a red candle because, we can accelerate through it and have a throwover, right? So, but here we are in the Dow, and something I'm shorting today because I think if there is a recession, there's going to be financial problems at the banks, is the XLF looks a lot like it too, just a little weaker on the RSI. So I'm going to be buying some puts in the XLF. I have resting orders in today.
All right.
So just
Well,
something to think about. I know it's crazy. It's a melt up, but I have to try these formations when they're there because they don't always show up. So when they're there, they don't all work, but I try them.
Yeah, well, of course, and I'm going to talk. I want to talk a little bit about the euro and the FX response and what's going on here. And just in case you guys missed it, Goldman reported it's up slightly. BlackRock reported it's up slightly this morning as well.
That kid was in a BlackRock commercial. Tell me that isn't crazy.
Who?
The shooter.
I have no idea.
Why they're taking that commercial down.
Oh, okay. I mean, okay.
Anyway, he was in a commercial.
Oh, all right. Well, that's crazy. All right. Well,
yeah,
so anyway,
everything is.
All right. Couple things I want to point out this morning. Obviously, the euro is probing some pretty key resistance. We just, you guys were just talking about it, Ryan, and you were just discussing it. One of the other things that I think is really, really important that we look at is what's happening in the bond market. And you can, you see like the notes and the 10-year notes. They're still holding up. Yields of You can see we're still holding that breakout point here. Very, very big level. It's a 618 retracement. Yields are a little stronger this morning. And as bonds have sold off, but I still think that we're in breakout territory as far as the actual 10-year contract. There is the curve is moving a little bit too, and you can see like the 30-year, the bonds are down a little bit more aggressively as yields are higher there on the 30-year a little bit more aggressively. So it's you can see the difference between the 30-year and the shorter term duration, right? Excuse me, right now. But the other thing is I want to talk about the euro because we do have the ECB this week, and we've got the euro pressing, as you guys were just discussing, key resistance, and there's also a 618 retracement we need to be paying attention to at 109.35. 127% extension comes in closer to 110. If you listen to the week ahead video, I explicitly want to be shorting the euro on a move to 110 this week. Now, I want to talk to Ryan and Kman about this idea, because that is like one of my trade setups of the week. Is if the euro starts making it towards 110, I am going to be on the short side of that. I still believe that the U.S. growth prospects are a little bit better than Europe, and I think that should we get some risk aversion in the weeks ahead, or some volatility, the dollar is going to catch a bid as a result. So I am looking to stage, a short somewhere around the 110 level, anywhere from 110 to 110.30. So this whole area, as I explained in the week ahead video, is what I'm thinking to do. Ryan, what are your thoughts about the euro on a move to 110, and what the reaction is going to be up there?
Yeah, you're probably going to see a bit of selling coming in now. It's a big old level. We've tried it several times. It's another one of these historical levels. So, yeah, nothing's going to move in a straight line, and that'll be a pretty strong move up to 110 over the course of a month and a half after we hit those 106, 60, 70 lows. That triple bottom you got there. So that would be a decent enough stretch point if nothing is really going on. If the market's priced and fully priced September, and the Fed have indicated September, and we're on the road to cuts, that's probably when you want to be thinking maybe about fading a weaker dollar. And if it coincides with your 110, then so be it.
Yeah, and Kman, do you think Christine Lagarde's going to step out and say anything too much, too revealing about monetary policy moving forward this week?
No, I don't think so. It's going to be an ECB meeting, which is between autopilot and leaving a door open for September, probably. I don't think she wants to be too hawkish or for too long either, although she was forced to be for a good while. I'm not sure whether the ECB this week is going to be a big market mover. But yeah, it'll always be traded. Would it not be by algos and stuff? I'm still not a huge fan of the euro, but at the start of the week, it looks better bid versus quite a few things actually. Even if you look euro antipodians, euro sterling finding a little bit of support. I think that is more to do with the sterling side ahead of the inflation data on Wednesday, but. Yeah, it's finding a bit more support, and I wouldn't be surprised if we go and test higher, because if you look at the events that happened over the weekend, we had a pretty much similar reaction to what we had on other events where Trump got more support, right? That is, curve is a bit steeper. The MEX is getting sold. And well, China got sold a little bit, but they are in their planning meeting, so that's to be decided. But it's all pretty much in line with what happened on prior reactions, and we also saw that past prior initial reactions that the dollar got sold afterwards, or at least came back to where it was before. So yeah, I think that's just in the Monday trading right now, and but I'm still relatively not going to say like I want to sell dollars and look back at it in a year's time, but I still think that unless Powell tells us anything different in 4 hours, that the dollar could remain on a bit of a weaker footing somewhere. Just because we also know that Trump and his entourage are not looking at a higher dollar either. So all of what's happened up to now is pretty much in line with what happened before on Trump positive events.
Yeah, and one of the other catalysts, and here just kind of talk about this week, and then I'm going to talk about something more tied to some of the conversations that I had on the week ahead video. About something not market related per se, is don't forget, tomorrow is is it tomorrow? Yeah, tomorrow's US retail sales. And I wouldn't be surprised if they're pretty soft. And hopefully that's the catalyst. In my opinion, that's the catalyst that drives the euro above resistance tomorrow and pushes us up towards the, high 109s, which allows for an entry ahead of the ECB. Because I'm with you guys. I don't think Christine Lagarde's gonna, lead us down the path that she's ready to, do a whole lot. So I don't think the euro is going to sustain much above the 109 and change level. So I'm really hoping that is the catalyst, that we see some dollar weakness following tomorrow's retail sales. I know we just have about 5 minutes left in the show. And so let me mention a couple of things, because I know if you listen to the week ahead video, you probably heard me talk about the breakout from the Gelber group. So let me mention this to you guys. I was and for those of you that didn't listen to the week ahead video, I got some pretty exciting news from us here at ForexAnalytix. Now, first of all, before I even say that, if you haven't heard, for the month of July, if you take a trader funding program assessment, you'll get a free one-on-one consultation with me. I'll spend some time. I've got bookings this week, several that I'm meeting with traders, talking about how to pass an assessment, kind of things that I did to pass assessments. All the tools that you have available to you with ForexAnalytix, because in our chat rooms and where our trades rooms at and all that fun stuff. But over the last couple of weeks, I've been talking to an individual, a trader that's been at the Gelber Group for 19 years. His name's Tommy. You guys will probably meet him on August 1st. The Gelber Group, if you're not familiar with who these guys are, if you've read Market Wizards, the CEO, David Gelber, is one of the, or Brian Gelber, excuse me. I think David's his brother. Brian is from the Market Wizards book, the original Market Wizards book. They have a prop firm, and he's been running it for like a quarter century or whatever. Really big group out of New York and Chicago. And anyway, Tommy's been there 19 years, and he knows a trader that I'd traded with for many years named Tommy, and they're friends from the city. And we have no association with them other than, we sat down and Ryan got to meet with them the other day. Didn't you, Ryan? And great guys, right?
Yeah, good bunch.
Good bunch of guys. They're really promoting. They're trying to find some traders to join their ranks, and it doesn't cost anything. You can apply, but you have to be a U.S. resident, and they're going to get hundreds of applications, but the cash prizes are real. And even if you don't win, doesn't mean you won't be selected, because they have developers and engineers that are actually following the individual traders, how they approach risk, how they're navigating through the markets, because it's all discretionary. And so they're going to be really, really like through a fine tooth comb. They're going to be going through, all the traders that are in this competition, how they're approaching the market, because they're willing to make a really big investment into, some traders that they think could trade amongst them. This is like an opportunity that I had with the Gellos group, that I only had because of the people that I knew. And they've seen me trade, so I had that opportunity. Not very many people get this opportunity, so this is an awesome and amazing opportunity for those of you in the US. Now, if you're not in the United States, they hope that if this is successful, that they're going to be able to do the next one internationally. They're probably only going to accept 20-30 applicants to be in this competition, but if you guys think you have what it takes, make sure you check it out. It's called The Breakout at the Gelber Group, and they're going to be here on August 1st during the F.A.C.E show. So like literally August 1st, right at this point in time, we're gonna interview a couple of them and ask them a few questions and have them here to talk a little bit about what they're doing. It's a couple-month competition, and it's a big deal. And like I said, we don't have any affiliation with them. I thought it was such a great opportunity, and so did the rest of us here at ForexAnalytix. We think I hope to God, a couple of you that are in our ranks get to join the Gelber Group and trade with this amazing group of traders. If you don't, you know, I mean, this is what their whoops, that's not it. This is what their you know, trade desk looks like. I mean, this is their New York, I believe their New York trade desk is right. You can see it. Well, I don't know. I have to go over to they have a couple pictures of like their trading floor. You know, this awesome opportunity for some of you. So anyway, just want to mention that because I did mention it on the week ahead video. And you guys, like I said, if you're in the US and you have some, you know, some of your you know, you can talk about how much you're trading and the way you trade, and you know, have some of your P&L statements and can go back a couple of years and show them kind of what you've been doing. Take advantage of it. It's going to be awesome. All right. Sorry, Dale, didn't mean to bleed into our interview, but like I said, check it out. Also, don't forget about the trader funding program, because you can run that concurrently. I know some of you are like, well, I'm in the trader funding program. Doesn't matter. You can do them both. Doesn't, and the other one is free to do. So take advantage of it. All right. Anyway, thank you, Ryan Kman, for your comments today. Did we just get data out? Empire State Manufacturing?
Yeah, Empire came in
still weaker,
not as bad
but,
as expected.
Not as bad as expected?
Yeah, down 6.6 versus down 8 expected, but still worse than last month's down 6.
Thank you. All right. Sorry, I totally forgot that data was coming out this morning. I thought it was coming out in an hour and a half. So appreciate that. You guys can see the data as it was released here on the data flash included in ForexAnalytix. Anyway, Dale, it is all yours. And thank you, Ryan. Thank you, Kman. Thank you, Coach.
Okay, guys. Good to be back, Dream Team.
Cheers, guys.
Let's have a good week, huh? Let's guide our people.
Thank you, Dale.
We don't click anyone's mouse, but we're your guides. If you want one, you don't need a guide. That's fine. So Alexander Perna is with us, and Alexander's taught hundreds of people how to trade over his career. Probably got a little burned out doing that, and now just trades his own account. Alexander, you have no X to grind. You're not selling the service. Just want to let people know that up front. How are you today?
Hey Dale, good morning, and good morning everyone who's here watching us live, and hello to everyone watching the recording.
Okay, so actually, you know, you brought something about RSI, which is, you know, my standalone momentum indicators that I use, and you said it's also, besides it being a tool, it's a time saver that you're going to teach people how you use it. So I'm ready to watch and
Nice.
ask questions, and
Cool.
go ahead and share your screen, and really appreciate you putting thought into what you're going to talk about before you come in and have your 30 minutes here on F.A.C.E. So thanks again, Alexander.
Of course, Dale, no problem.
In advance.
I really appreciate you having me on your show. So thank you.
Okay.
I am working on just with one screen today. So let me share my screen, and then I might have to rearrange some stuff here. I think I can just share.
And you could find Alexander on X at Who's Trend, WHOSTREND. Okay,
Yeah,
there he is.
So I
He
brought
also
up
used to do game shows. He was a host of a game show.
Yeah.
Go ahead, buddy.
Yeah, I started my my X profile back when it was Twitter, you know, right after the pandemic, and it was kind of the thing to use like other images and stuff, and so I just kind of brought back good old Alex Trebek.
Yeah. Okay.
But so this is my profile, and so like you were saying, we both use relative strength, but definitely in a different way. For me, I don't use it as a traditional indicator. I use it as a way to try to find the trading environments where my trading does the best. So this is a little tailored to higher time frames, although you can find this kind of information all over the.
So this is more of like a currency meter.
Okay, yeah. Okay, yeah. Let's use that word. A meter, a heat map. I've heard other things before, but the idea is that I'm going through all of the currency pairs, and I'm looking at how they're performing in general rather than performing against a specific currency pair. So
Okay.
like, you know, in looking at euro dollar, we can
Can you
definitely
blow
get
that
some.
up?
Oh yeah, sure. Just the euro dollar.
No, that your chart, your
Oh, this here,
relative strength chart.
make it bigger.
Yeah, there you go.
So you know, when we're looking at a pair like euro dollar, we can definitely get some information as far as what is the relative strength of the euro against the dollar, but we don't really understand with looking at euro dollar what's the relative strength against the CAD or the Aussie or the Swiss. So I kind of take a more in-depth approach in trying to map out kind of that general performance. So when you typically come across a heat map or like a currency meter on the internet, typically what they do is they'll use some kind of trading benchmark like the futures, or they'll just use the major pairs, and they'll do an analysis just using the futures or the major pairs. And that can work, and it gets really close. I wouldn't say really, maybe it gets close to my analysis. But then again, you know, you're just kind of looking at, okay, well, what's the euro's performance against the dollar? What's the pound's performance against the dollar? And it doesn't always translate then, well, what should euro pound be doing? So I kind of just take this more in-depth approach. The chart that we're looking at is done on a weekly time frame. So this is big time frame here. And this would be kind of my general bias as far as you know, if I come to a certain pair, just off of this, I'm going to be leaning a certain way, bullish or bearish, right? And just the easiest way to use this would be to take the extremes, right? So we don't want to take something that is close to one another. In the middle there, you see New Zealand dollar and you see the US dollar. You know, New Zealand is technically stronger than the dollar, but you know, they're right now they're just kind of playing a tug of war game that no one's winning. Where, you know, you go to something like pound CAD. You know, pound CAD is also playing that tug of war, but the pound is winning, right? So just kind of having this graph either in front of you or just in your mind can save a lot of time looking for the environments that a trend trading strategy would benefit from. Right. So typically in my analysis, I don't go through all 28 currency pairs.
Yeah, I notice you're using CAD as a representative for commodity currencies rather than Aussie.
Well, I mean, Aussie is in
Aussie.
there as well. Aussie's up there by the pound. I'm just using.
Oh yeah. Okay.
Yeah, I'm just using the 8 single major currencies for the stuff that I post publicly. So I also do relative strength on things like the Mexican peso. You know, that was a beast for a long time. Like it was the carry trade.
Yeah.
And
till
but
the
you know,
elections.
Yeah, keeping it to the 8 single major currencies just kind of helps keep traders focused. I mean, you know, especially if we're still kind of figuring our way through the Forex market, the last thing we need to be trading is like the Mexican peso or the Turkish lira, right? So just sticking to these 8 single currencies, you know, gives you the movement you need, gives you the liquidity. So there's safety. And these are just your typical pairs, as you know. So just kind of looking at this, I mean, I brought pound CAD up because it has been a really persistent trend, and most of the trends have been more with the cross pairs. So I haven't traded a lot of dollar just because you can even see since like the middle of May, the dollar has just been kind of in the middle here. So you know, really trying to focus on those extremes. You know, of course, you probably could have found some trends trading, you know, pound dollar. Pound dollar was the strongest currency, and the dollar was just kind of in the middle. So there could be a trend there. But you know, when you see the spread between like the pound and the CAD, that's just going to offer a more persistent, strong trend. Typically, you know, shallow retracements and big impulses. So just kind of even taking a look at this. This is the current analysis. Like I was saying, this is the weekly analysis. So I only post this once a week on Sunday because it only changes every weekly candle. But just to zoom in a little bit, if you are trading on a smaller time frame every day, I do post a relative strength analysis that I get from the 4-hour chart. Or no. Actually, this one is from the daily chart. Excuse me. So you'll see this move around more often, and that's why I post it more. But even so, this only gets updated once a day. You know, because I'm using a daily chart. So you know, one thing to think about with the tools that we choose to use in our trading is how is it helping us save time, energy, and effort? You know, there's a lot of things that I used to do. Actually, you brought up my education background. There's a lot of things that I used to do that really didn't do any of that for me, and actually, you know, put more time into my trading. So, you know, for me, I love trading. It's a passion. I've been doing it. I've been in love with it since I was 19 years old. But at the same time, you know, I don't want to spend my time in front of the screen. You know, I want to be outside enjoying the Florida weather when it's not raining, or you know, spending my time how I want. So that is one thing that I would say. Yeah, I want to live. I want to live.
Nothing wrong with that.
Yeah,
it's good balance to live and to be in front of your, you know.
Well, this is the reason I trade. And I think a lot of people lose that. You know, they start to trade as a means to an end, and they let that means get in the way to that end. And then no wonder we get resentful in our trading at times. But anyway, so if this is interesting to you, I just went over the weekly and the daily relative strength. So you guys can use this as you wish. But you'll see even on the daily relative strength, pound is very strong relative to the CAD. So, you know, this idea of alignment, you know, it's really good to see the daily in an uptrend. It's even better to see the weekly in an uptrend, the daily in an uptrend, so on and so on. So you can
go. All the TFs lining up.
Yeah, I like the idea of alignment. A lot of people use confluence as another term, just the same idea that all of the tools that we have selected are kind of coming into harmony, and those are typically the windows that we need to take advantage of. So just kind of looking at here. There we go. Okay. Trying to get this out of the way here. So we were talking about pound CAD. So now that I'm on TradingView, on the right-hand side, you can see that I have some green and red markers. So that is the weekly relative strength. I kind of come into my trading list and I just mark the currency pairs that I should have a bias on. So you'll see, you know, CAD yen, don't really want to trade CAD yen. I mean, other than it not really doing much on the 1 hour, and it did get whacked on the 4 hour, but just not really doing much at the moment. I'd rather go to a currency pair that has a better look to it. So where CAD yen was just kind of waffling, you can see that pound CAD has a direction it wants to go.
Yeah.
And
Good
so just being on coming from the education side, maybe I should step further back. Coming from the student side, I understand how it feels to be introduced to a lot of different tools and strategies and ways of trading as we kind of grow up and kind of learn all the different ways. But there comes a point where you kind of have to go through that bag of tricks and start throwing stuff out. And really just my one big message for anyone listening is really have that focus of trying to refine the amount of time that you spend doing your analysis. Have your rules, have your trade plan, make it objective. So it's kind of each chart is more of a, boom, 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 next. And then have that moving. I'm a very, very basic trader.
I do a lot of that on the weekends, Alex, when markets aren't moving, and I can be a little bit more objective. And I'm ready to go after the weekend. I'm prepped for the week. Of course, there'll be surprises and things I might have to, reprocess, but I pretty much know by, Sunday night's opening what I'm looking to do the following week. Are you like that?
Yeah, I spend more time analyzing what I've done and looking for new stuff more than anything. I mean, as far as my trading goes, it's very quick. But on the weekends, I'm looking back at, okay, what was last week's trading? Did I enter all the trades that I should have? So I typically go back to the week's trading and I mark all possible trades, and then I mark my trades. And I just want to see that I'm continuing to take all the trades that are, coming about while I'm trading. And so yeah, I mean, Sunday is definitely my prep for the week, and Saturday is typically my, okay, let me just take a little bit of time and grade myself.
Okay. Yeah. I mean, that's how you learn, by looking back. And, if you also prep for the following week, you don't have to do your analysis on the fly, like a lot of people do. And then it just turns into an impulse trade rather than a plan. So yeah, you do you do an autopsy on your trading every week too.
Yeah.
So yeah, that's cool. That's like journaling, right?
Definitely. Yeah. I mean, it's exactly the same. The idea that traders should always be learning comes up a lot. And I in my classes, I actually used to fight against that. There, in a sense, we are always learning, but for me, as a refined trader, what I'm learning now is just how to define my setups better. Yeah. Right. So when I'm going back and doing this autopsy, I'm not looking at, oh, well, what if support and resistance? What if I would have used support or resistance? Or what if I would have used this or that? Or what if I would have gotten in this way? But it's more of, okay, how can I better articulate this particular scenario that I'm taking so that I can better map out over time the probabilities or the odds of that specific setup. And in that way, I think as traders, we should always be learning how to define our setups better.
Okay. And you release these relative strength charts, currency meters, whatever you want to entitled them um, on X. That's how people get a hold of it, or how do
Yeah.
they follow you for this information?
Yeah, just follow my X account. I typically post the weekly analysis on Sunday, like between 5 p.m., 8 p.m. Eastern time. And then the daily relative strength, I'll post daily. And I've been trying to get it in around 5 p.m. to 8 p.m., kind of as we're sliding into the Asian session, kind of the start of the day where we get the liquidity coming in. So I definitely try to get it out before the Asian session really starts to move, or at least has a
Okay.
chance to move. So again, oh, go ahead.
No, so we're about halfway through the year, Alex. How are you doing this year?
Good. Actually, like I said, the trends have been more in the crosses, but been doing really well. Luckily, and this is luck. I just didn't have any yen exposure because that was a crazy move. You know what?
Yeah.
What was that? Like a 3 or 400
Yeah.
pip
In
swing?
the
Really
new
quick.
that's the kind of chart action where you grind, there's small tight ranges, and then everything changes in a New York minute. Everything can change
Yeah.
on a
Yeah.
candle like that. It changes the whole character of the market. So I'm glad for you that you're doing well. It's been pretty small, limited, kind of low volatility FX markets. Don't you agree? Especially euro and
Yeah.
a lot of
I
sideways stuff.
I haven't been trading a lot of euro. Like just this week, euro dollar came up on my radar as far as like a bullish bias.
Okay.
And I mean, it looks pretty good. You know, actually, I mean, the trend looks solid, really small pullbacks. I know we're dealing with these highs here. But for me, it just this trend has been building, and I think it could just keep going. So I'd be looking, I am bullish euro dollar now as far as dollar pairs go. Aussie dollar has been a better trade. At least Aussie has kept, um,
Do you
that
think
just,
that we've mentioned, the pound has been strong, gold has been strong. Now, euro's kicking in for you. Do we have do you sense a broader dollar theme? Because, I have the dollar cracking a couple of uptrend lines in the last few weeks, and I'm pretty negative on the dollar. I don't think we're going to have that milkshake theory where we go to 110, 120, 140. I mean, not before I think we see sub 100 on the Dixie. And that's all predicated as long as we stay under 106.50, which we're getting further away from. And I am waiting for a dollar rally to sell into this week. If we get a rally back towards 104.80, 105, I'm a seller. Are you starting through your meter to see a dollar trend emerging and not just individual currencies
not
trends
not
emerging?
not yet.
Okay,
Just kind of
that's
the
fine.
dollar. Yeah, the dollar has just been kind of stuck in the middle here. So I've
Yeah,
I've been keeping my eye on. So knowing that the dollar is kind of stuck in that weekly time frame,
yeah,
just keeping my eye on the daily time frame and just saying, okay, where is this dollar really going? So I mean, when you look at the relative strength just for this month, because this is this chart starts basically the last day of June. So this
okay,
is just the month of July. But you can see that the dollar starting off as one of the stronger currencies hasn't been able to hold up with that.
yeah,
So I do feel with the dollar, I mean, we're at extreme bearishness right now. I think the daily candle closed like at its low. We're like pressing up to that 104. And I know 104 has been a big level for a lot of people. So we're just kind of in that like
Extreme bearishness based on what? The way the chart looks or sentiment?
well, I would say kind of both, in the sense of like when you learn about candlesticks, closing at the low of a candle typically is extreme bearishness.
Okay.
Being at that support, I definitely would love to see, for confirmation of a bearish dollar, we want to see price break through that support.
Yeah.
Because sometimes, when you get extreme bearishness at support, the market likes to whack all of, that one side. So looking at the chart, it's hard for me. It just looks like it's going sideways. And I've just been kind of staying away from the dollar. It just hasn't really, I mean, Aussie dollar, I have been trading, and I was trading dollar yen. Dollar yen has just been in a really strong trend. And I mean, even with that intervention, is still holding the structure. Most of the yen pairs are, except for like, I mean, even New Zealand is.
Kiwi got hit.
Yeah, it's such a weak. It's very weak right now.
The Aussie Kiwi has been a big trade. Long Aussie, short Kiwi. Well, Alex,
I've been long. I've been long Aussie Kiwi. It's been a really good trade.
Been a monster.
It's nice. Nice
and
trend.
They're so related, for a move like that. They're almost like.
Well, what's interesting
is brother and sister.
It's like a euro pound, just very. But this is kind of interesting. It's trying to sustain its trading above this just very large kind of base area. So, we'll see. I was able to get long, and I've been riding this. So we'll see if it has more running room until we can maybe test these highs here where we have a little bit of supply. Just this really big move down. So this is an interesting pair since you brought it up. Relative strength is saying go long, both the weekly and the daily. The technicals are saying to go long. We can look at like a 4-hour chart. I don't really see any lower lows. This thing has just been riding the moving average, basically. It's a 20 period. So whether the 4-hour or the 1-hour, definitely been a really good pair.
Okay, well, you're a good mentor. I want to thank everyone, for staying here and listening to Alex mentor you. So he's giving you some pearls. He can't stop. He can't help himself. He can't stop teaching.
I can't. You just have to tell me to be quiet.
No, he can't. No, he just, it's in his DNA. He wants to pass on what he knows to other people. It's really a pretty good principle to plant seeds and not look for people to pay you up front for them. So, Alexander, I appreciate what you do for the financial FX community, and thank you for being here and having come here with things to give people some food for thought and also some tools, the way they can, save time. And also, I'm a big believer in being long the relative strength and being short the relative weakness. So appreciate you bringing that to the table here today, buddy.
No problem. And I really appreciate you giving me the opportunity to come on here and have a voice. So thank you for sharing your platform. I don't do a lot of interviews. I kind of, after my teaching, I just kind of wanted to be on my own and just kind of work on my own trading. So thank you for this. I really do.
Oh yeah, and Alex recommended Don Dawson. People are enjoying Don. Anyone else that would like some visibility that you think has some value to add? I'm open to it, and want to thank you again for that referral.
No problem. Anytime, Dale.
Alexander Perna, everybody. Check him out at Who's Trend on X. Consider using this tool that Alexander offered, see if it gives you a little bit of an edge, or at least gives you some extra time to get away from your trading station. And that's a wrap. Don't just count your pips, count your blessings. Thank you, my trading warrior brother. Good hunting. I'll talk to you in the fall. So I guess he's gone. All right.
Yeah. Take care, everyone.
All right.
Bye-bye.
Diane loves you. Diane Peterson uses your stuff all the time.
Oh, that name sounds familiar. Hello, Diane.
Yeah. Okay. All right.
Okay. Bye, everyone.
All right. All right.
Bye,
Take
Dale.
it easy, buddy.
Cheers.
All right, everyone. You could join the team in 15 minutes on the Morning Edge. And we'll see everyone for Turnaround Tuesday. Adios. And you heard me. Don't just count your pips, count your blessings. We'll see everyone tomorrow.